Okay, so I just gave you a way to structure, or in terms of your capital raise, right? This is an example of what it could look like, and it's a way for you to execute against if you contacted a lawyer. They will set it up for you. This isn't legal advice, as I said, but this is a route you can go. So you end up with this empty bucket, this bank account that's empty, it's ready to take in money. Now you've got to go out and find accredited investors within the US to fill that bucket up with money so that you can go ahead and actually execute against this business plan of yours, which of course is, in this case, buying real estate, big real estate, right? Multifamily. So I'm going to give you this particular section is a 3-step plan. And I'm going to show it to you right now. It's going to be really quick and it's going to be very, very easy to execute against. It'll make sense to you very, very quickly. But before I do that, I'm going to give you a quick cautionary note. I have been raising capital for a very, very, very long time. So the last 10 years, since 2010, right now it's 2020, it's January. I've been doing it for straight 10 years. I started off as a headhunter, moved into the real estate world, started working into real estate investments, alternative investments, private equity, have been doing that for a very, very long time. And I'm not talking about the big businesses, the big five and all that kind of stuff. I'm not talking about the Fortune 500 companies. I'm talking about the smaller entities. So we've had to learn how to do things, be a bit creative in the ways that we attract investors. It hasn't just been, let's just contact this fund and then they'll just send us 100 million and then we'll go buy this thing. It's not been that easy. We've had to figure out how to actually solicit and advertise to investors everywhere. So when I give you these plans, these are very workable plans for the everyday person. Anyone who's got the structure, who's legally compliant and can actually go out there with a tin cup and say, hey, I need some money. This is going to work for you. So bear that in mind. And let me also say this. When I've been selling or raising capital for other companies, make sure that if you're doing the same thing, if you're going to use a strategy to raise capital for a company you work for or a company that you're going to work for, make sure that they're going to do right by the money. Because with me, in my instance, I've been raising cap like this for a very long time. One of those instances, it turned out really bad for me because the owner of that company that I was raising cash for skipped town with half the money that was in the pot. And that's never a good thing, especially if you're the one solely responsible for bringing in the capital. So that happened to me. It was a very big legal slap in the face. So that's a bit of a cautionary note for you. So bear that in mind. If you don't believe me, go ahead and Google me. I think they have the DOJ, the SEC reports online. So it's all there for you to see. So but believe me, I'm the real deal. So as far as this specific plan is concerned, you're looking for accredited investors, so people with that money. Remember what that is? $200,000 per year for at least the last 2 years in earnings, or $300,000 per year for the last 2 years with a spouse, or have $1 million in assets outside of their personal residence. So they can't count their home as part of that asset value. So you're looking for these people. So where do these people exist? Well, everywhere, right? They're accredited investors, and America has quite a lot of them. It's a good economy. But we want to talk to the ones that are not actively looking, right? They have that kind of money. They have these pension plans, right? And they're managed by money managers. And what is that in the US? IRAs, right? So Roths, we're talking about IRAs. We're talking about, self-directed, if you can get into them straight away. We're talking about people who have capital that's being managed by a money manager that has put that money in the markets for them. So what does that look like? Let me just draw this out. An IRA is a tax efficient plan that has money with a money manager that money manager manages that IRA, right? So over the next however many years, you've got this IRA, which is slowly being built up in value. And this money manager is allocating that money into the markets. And what does that mean? It means they're buying stocks. It means they're buying into different kinds of funds, mutual funds. You've got annuities. And you've got various like REITs, real estate investment trusts, which are tradable funds on the market. So you've got these different market instruments that these money managers are putting money into. And what we want to do is we want to tap into this IRA money, as long as they're accredited, but a lot of the time you can find them in there. So how do I do that? How do I create, this is my market. So how do I access that? Well, if I start advertising, oh, hey, I've got a great real estate investment in Manhattan, and I start hitting the market with that and trying to advertise that to these guys, won't necessarily do anything, right? I'm not going to do any damage. No one's going to really instantly say, hey, I'm interested. Oh, but I have an IRA, so it's not my money, really. It's money that supposedly is mine, but it's not in my pocket. It's not in my bank account. It's with my IRA, and it's being managed by someone. And they buy all these different things for me. And sometimes I can like select a few here or there, but the reality is I don't really have any control over it. So we want to tap that money though. Okay. Because everyone else that's looking, they've become too choosy. And if you're actively looking for different investments and I give you mine and you're looking at some swanky hotel somewhere, you're not interested in my, average looking 20 unit multifamily piece in Florida. Okay. So how do I get you to do that? Well, we've got to really focus on how we can get these guys super interested in working with us. So how do we do that? Well, the process is really simple. The process is we want to move their IRA to a self-directed IRA. You ever heard of that? It's basically still an IRA. The only difference is it's not with the money manager. It's an IRA that's under the owner's control. They can distribute where that money goes, but it's not in their bank account either still. It's actually held with a custodian or an administrator or admin. I'll just say. And this custodian or administrator is just literally all they're doing is like, kind of like an escrow. They're just holding it for you. And you can tell them where you want that money deployed. You can just have them hold it for you if you want to. So if you've got $1 million or $2 million in there that you can't actually go in and take out and spend, but you can say, hey, I would like to actually take my money out the market and put it into, say, the real estate investment that you guys are pitching. Okay. So how do you get them to do that, right? They could be buying gold. They could buy silver. They could buy anything outside of the market, or equally, they could buy stuff in the market, but it'll be their choice. And so there's a strategy now. How do we go ahead and have that happen? Well, what we've got to do is we've got to contact these guys somehow, the IRA holders, and make their money managers out to be bad people, right? We want these guys to be the devil so that they then say, hey, we don't want our money with you. We've got to move it to a self-directed. And by having it in a self-directed, I have good control over my money. So how does that happen? Well, the good news is that Fox News and all the news outlets in America are so favorable to that. And this is the strategy, right? Here's a secret sauce. That's the plan. And here's a source. When it comes to you, and this is the marketing plan, you go out there, you look on Twitter, you look on Fox News for anything longer than 15 minutes, CNN, whatever. And if you look at what's happening in the marketplace, it's filled with fear. You're going to lean on that fear. This bank pulled $500 billion out of stock and moved it into cash. When have they done that before? Oh, the last time was 2007 before the other recession. Oh, Trump's just tweeted this and we've had a huge market volatility, all this sort of stuff. And oh, we've got this news, this country's bombed that country's bombed this country. There's trade relations under fire over here and Brexit, England, Brexit, it's all of this stuff is affecting this marketplace. And then they start talking about the Dow and then this. And they have all these red arrows pointing down or green arrows pointing up. And of course, they're only on the stocks that you don't have, right? So you go to your money. So what we're doing is we're telling these IRA holders to go to their money managers and say, why have you still got my money in the market? Because the market's volatile right now and I'm scared because I'm watching this stuff. So how do we get them to watch that stuff? Well, this is where your marketing campaigns come into play. So we take those news headlines, those snippets, and we use Facebook and various other kinds of marketing platforms to start targeting people who are high net worths. And you can do that by zip codes and stuff like that. It's really straightforward. It's very, very simple to do. You can buy lists of those IRA holders. You can literally just go pay-per-click on Google. Anyone who's like looking at IRA plans, or you can do what's called retargeting. All of this stuff I'll be explaining in other areas of my course in terms of the actual specific retargeting methodologies for marketing. But let's say you understand it. You understand that you just do a couple of things in your computer and you can send out this marketing campaign. And now you're basically getting marketing in front of people who have IRAs. Okay. Now, how do you get them to take attention to your advertisement? Well, you're giving them that headline, that fearful, scary headline. You're saying, hey, look, this bank just pulled $500 billion out, or $500 billion out, I should say, from the market. Last time they did this was 2007. do you know, if you've got money in the market, it's at risk. Give us a call if you want to learn how you can safeguard that capital. Some of them will call you. Okay. When they call, what you're going to do as your entity, as your LLC, is you're going to say, okay, we're not fiduciary managers. We can't give you financial advice. What we can say is there are these custodians and administrators that will take your IRA, and you'll basically be able to have this self-directed IRA. It will be completely under your control and not in the market. Let me ask you this, Mr. Whoever you are, or Madam what? Has your money manager ever suggested to pull your money out of the market? No, because they don't make their money unless the money's in the market. They'll get fired from their jobs if they move your money out of the market. Their whole job is to keep that money in there and circulating. They might suggest moving from one thing to another, or reallocate money, but they're not going to take money out the market. So we're now making these guys out to be bad people. So the market's going up and down. They don't know what's going on. It's like a big gambling pot right now. You want to take that money out, have it into a self-directed where at least you have control over your own money. You can at least then safeguard it and put it into standardized real estate. You can start doing things like that. Buy some gold, safeguard with gold. At least you can bank on the stability of it, or even land or commercial real estate. You start talking about the benefits of taking the money out. So of course, what happens? The person who has the IRA is now really fearful, which is one of the strongest emotions, right? The fear of loss. They're worried about the money that they have. They move it to the self-directed IRA, this custodian, which is a separate entity to you. And of course, they're going through this process of paperwork to make this happen. And the whole while, this company is explaining to them how securitized they are, all the regulations that they comply with, and they get them to sign all these different papers, and the money gets moved. This guy's pissed off. And now the money's with this custodian. And of course, they have a menu of different investments that they can go into. And of course, before you set that up, before you contacted the IRA holders with your package, you've contacted this custodian or however many you've contacted, and you've gotten your option on the menu. Because remember, if you're regulated here and compliant here, these guys are going to let you in too. So you're going to be on their menu. That doesn't mean that they're going to endorse you. It just means that you've had to be vetted to the extent that you are a compliant security. You're in the real estate world. You can be in there as well. They're not going to endorse you, but what you can do, and what's the benefit that's happened here, is that you actually have a dialogue with the IRA holder. You've now safeguarded their capital. They can now have full control over their money. And now they're thinking, well, what do I do now? I've got this $1 million here. There's $2 million here. What do I do with it? Well, you can say, well, listen, I can't provide you advice and guidance financially on where you should put your money, but I do have my own investment. And we are a great multifamily opportunity, or we're a great warehouse, or we're a great storage company, or we're a great whatever you've decided to buy or looking to buy. And it's a great asset. It's got this, it's got that, it's got this kind of yield. So you've got your package and you've got your explanation, you've got your sales pitch, and you give that to them there. The likelihood of them buying is like so high. And I can tell you that this has worked week in, week out for me. I've had a whole sales team do this, and we've been doing millions of dollars every single week. You know, it takes about two weeks to get started, and then it starts flowing in. That process becomes like cutting through butter with a hot knife. It just works so well because that fear of loss there's been a solution that's been created, and now there's trust that's been built up. And now you've got people buying into your good investment. You have a good investment. That's what this is. You created a good investment, not a scam. You're not this is not a bucket full of holes. This is something that you've created that is good and meaningful for the person who's going to put money in there, and you're going to profit because they're going to profit. All right. So you've got this situation, and of course they're going to send you their cash. You're going to get 200-300 grand out of them, and you start building up this portfolio. Yes, they'll allocate the rest of that money in other things. They could even go back to the funds that they were looking at. They can look back at the REITs that they were looking at. But the reason they're more inclined to do that now is because they have the control over the money. And the key word here is safeguarding, safeguarding, safeguarding. They feel that they now have full control and they have safeguarded their capital. And people would rather have control over their money, right? So this is tactic one. And let me tell you, it works like a charm. So revisit this, go back to it, I hope I've explained it clearly enough, but that's exactly what we've been doing, and it's worked extremely well. So I'll see you in the next video, because the next section is going to be all about the blockchain and how we've used cryptocurrencies to start dragging in capital too. So I'll see you there.